Good morning, everyone. Welcome to Tuesday, the 18th. Hope you all had a good long weekend. And for your trading pleasure this morning, we give you a gap. Welcome. It's the welcome back gap. Joe, you'll get this. Do you ever listen to Cat Williams? No, Dave Chappelle. When he says how different it is from when you go from San Francisco to Oakland. I don't know if you've ever heard that skit. I can't repeat it because it's not family friendly. But right, welcome to welcome to Tuesday morning. So, oh, these gaps are a pain in the butt to trade. So, overnight inventory is, I'm using the references from Friday. Okay. The references from Friday are the last full day of trading. Then we had Sunday night. Then we had that weird Monday. And then we have this. So, all of that inventory is actually above Friday's close. If I go and show that, look at all that inventory, right? There's Sunday night, weirdo Monday session tonight. So all of that is above the close of business of the last full trading day. So what that means is, here's the deal. The way I look at it, if we can't take out 46, we're going to go sideways between 46 and 62 here. And we're going to get rid of all of that inventory that we've got at these lower levels back and forth like this. Now we're going to do that until the sellers get desperate, run out of buyers, and put it on sale underneath 46. Hey, Jag, that's what I'm looking at for now. Now, in the old days, when they rode horses to work, right, and had to hunt for their food like Uncle Jed, you would get a gap fill. Okay? That would be the normal course of business. Because in the old days, you had these markets where, well, not everybody had 200 million, 400 million, which is not a lot of money anymore to trade with. So the selling would happen quicker. And also, they changed the rules with short selling in 2005, which fundamentally changed the way markets trade. I don't know why I'm the only dinosaur who talks about this. Nobody ever talks about this. But when you change the rules, you change the way a market trades. And in 2005, they changed the rules, which just so happened to coincide with lowering interest rates and large money managers buying stock and putting it away, where the cert, if those stocks had, if they were certs, they'd have like 8 inches of dust on them right now, right? Owning Apple at $80 a share and stuff like that, and not selling it for 30 years. All of those combinations have made this market a market of decreased supply. So when you go to short a market, go to short the backside. So after all I'm saying, right, and everything, this whole speech, the lesson for us that affects our bottom line is don't short the front side of a move. Okay? Do not short the front side of a move, right? There's two rules in life. Don't eat yellow snow. Don't short the front side of a move. Wait till the sellers initiate before you initiate, right? You want to go behind somebody and let them block for you, right? Now I know I can say this now because we've got our North Americans. They understand they understand the beauty and the subtlety of an offensive lineman, right? When that guard pulls around the corner, you tuck in behind and let them clear the path for you. Let the sellers, right? Let the sellers come in and show themselves. There's no point selling a market where everybody is short and trying to buy it. As soon as it dips, somebody buys it. Don't buy that. Don't short that, right? In fact, it's really hard to go long too because the ranges are getting smaller and smaller and smaller. So what you do is you let the market open. And here's the thing. If the overnight high stays in place, you can short it because inventory is long, right? So inventory is long, right? This is our checklist, and we're going to have this checklist this week. And the checklist is a checklist to assess market conditions. So we have a market awareness checklist. This is like before you enter your setup, okay? So things like, is inventory long or short? Well, inventory now is long, right? What's the price action like? Well, it's not that great the last 15 minutes, 20 minutes, right? It's trading in a range between 55 and 57. Now let's see if we can get under, let's see if we can offer under 55, get to 54. Can we get a print at 54, right? That's another thing, right? So what's this tape like? It's fairly slow. It's going to speed up in 20 minutes. Now, the thing is, at the open, right, which happens in 20 minutes, you must honestly answer this question. What is the speed of an African swallow? No, Monty Python. Okay, nobody's going to understand that joke. The question you have to answer yourself is, do you possess the skill to trade a fast tape open? If you don't, wait till it slows down. If you do, fine, go ahead, right? Also, the open. Is it a fast open or a slow open? Not every open is the same speed. There we go. Thank you, Leslie. I don't feel like I'm 80 years old. So these are the kind of questions we have to ask ourselves. I'll have it all written down. The only thing is I have too many questions, right? I'm trying to make the list like 3 to 4 points so we can effectively understand what type of market we're trading in before we take the trade. Because sometimes it'll keep us from taking the trade. This way we don't have to waste any money, right? I don't know about you. I don't like throwing away money senselessly, right? That's why they invented cigars, so you don't throw away money senselessly. So that's what we have to ask ourselves. If the market opens, you can short it as long as it stays under the overnight high. If it doesn't, we'll use the stops. Okay. Our current overnight high is right at 57 and 3/4, which is where the stops are. Yeah, we are old. Next set of stops is 59 and 3/4. I've got them all labeled here. So these are the upper stops. What those are, that represents TPO. Basically, it represents the high of a TPO, right? A half hour candle. So here I'll show you where they are. These are the stops from these levels here from back in December, right? Stop, stop, stop. They're just showing where everything is. So those stops will help us know where to get out of trades and know where there's going to be competitive selling, right? So here, the E high from the 24th of January. That's a stop. We stopped right there to the tick. Then the next one's the B high and then the A high, and so on and so on. So anyway, those are the upper stops. There are places where we can anticipate competitive selling if you're long. If you're short, it's a place where you're going to look for the sellers to come in and start competing and lowering price, right? Because right now, all we've had this beautiful distribution. You see how the point of control moved up? Look at that. Overnight point of control moved from 51.5 all the way to 56 and a quarter. That's good distribution. That's really good distribution. Gosh, that was 1983. Sorry, I had to look that up. See, this is very hard to trade. Okay, this is another thing on our checklist. What do the candles look like? Are we in a tight distribution or accumulation pattern? Right now we're in distribution. Is that tradable? No, this is not tradable right now. If you're a larger trader, yeah, this looks like a barcode on the side of a box of Pop Tarts, right? And just like inside that box of Pop Tarts, there is nothing in there that's digestible for you, right? This is just full of chemicals and bad stuff. That's not food. This is so similarly in the trade, that is not food for us, right? So pretend we're animals. This is something we don't eat. We're going to get sick if we go and eat in there, right? That's not food, okay? The chart will tell you when you're supposed to eat, all right? Just like we would not eat Pop Tarts. It's okay. Let the large traders do business here. Now, for traders who have larger accounts, what you want to do is if you're short biased and you're building a short position in this area, your out is 58. Okay. You're going to have to, right? Now, here is where for larger accounts, you can scale out and maybe even close out and then re enter when we do the look above and fail. The look above and fail, if that happens. Now, we have 14 minutes left and we're dangerously close to the high. So sometimes we get a stop run higher and that creates some more shorts right before the open. So watch out for that. Because I haven't traded for 4 days, right? I'm going to cool my jets and do a little watching and trading with the micro. Okay, because I do not like to lose money unnecessarily. So I like to poke around and find out what's going on, right? So sometimes when you take these test trades like I do, you can think about it as sometimes you got to tip a bouncer to get into a club, and the club's not that good, but you can't go back and ask for your money back, right? So just keep your cost of doing business low, you know. So don't tip the guy, walk into a club, and then order a Magnum of Cristal, okay? Because just in case it sucks, you can get out, right? So that's the tip. That's a business expense, right? Your stops on test trades are a business expense. We had a seller here at 54 and a half earlier in the morning that took us down, and I noticed that it was kind of constant. And then we came back and tested that area as a backfill on the way down, and we tagged it to the tick. So that's why I left that red line there. I'm just going to turn it green now. Let's see if it acts as support. I'm just curious. So this is what I'm doing when I'm looking at the market. I'm looking at the chart to tell me, right, what's going on? Can we offer under 54.5? Or does the offer lift? And when it does, where does it go? Right? The offer is the red line. And it is the most important thing that you as a day trader should know. Right? If you do not understand how the offer works, it is going to eat you for lunch. Okay? If a market cannot offer underneath a level, that means the traders do not have to sell under that level. Right? So think of it as a commodity. Right? So under 54.5, if that commodity was like, you know, oranges, they don't need to sell the orange under 54.5 because there are buyers there and they can afford to raise the offer and see if the buyers will follow, right? Think of the sellers as the guys who drive the ice cream trucks. Speaking of London, right? If the kids are chasing the ice cream truck, price is going higher. If the ice cream truck can't find any kids, they will put the ice cream on sale back to the around the area that they purchased the ice cream, right? All this is a sales chart, nothing more than that. Yes, beautiful. It is the spread. And the spread is how Wall Street people have been making money for centuries. The space between the bid and the offer, that's where all the money is. That's where lie billions and billions of dollars of revenue in that little space. Exactly. And what is happening in the barcodes is the same type of business, the bid and the offer, just between 55 quarter and 57. Think of it as a big bid and offer. And all the sheep are just banging back and forth between the bid and the offer. That's all it is. Many a man has sold his soul for the spread. There you go. Thank you, Joe. Jane Street made $14 billion from the spread. How do you like them apples? Here we go. Inventory correction. Where are my shorts? My shorts. You're looking for 53 now, which is kind of the middle of this blue zone. Good observation. Oh, that's Wolverhampton Raj, right? Hey, how you doing? Man, it was cold in Telford this weekend, and I'm Canadian. At least my girlfriend didn't want to go hiking. That's what I was thankful. It's like cold, but I don't have to go out in the woods. I'm very happy about that. Let's see if that seller moves down to 54. So we're starting to correct inventory a little early. It was minus 50 in Saskatchewan, Celsius. Minus 45 felt like minus 53. My buddy sent me the thing. It's like, oh, I love my Canadians, but I don't miss that. Ooh, that's so cold it hurts. All right, let's see if we could offer under 54 and push that offer back down to 52. What I'm doing now is I'm looking for the pre-market bid, right? Because in that half hour before the opening auction, all sorts of shenanigans are happening. You know, people who are short, they're trying to buy back their positions. They're trying to bully it down. People who are long, cut the supply, just like cut the supply, cut the supply. So I'm seeing some sort of bid action here where the wholesale just kind of stops selling around 52, 53. Now, if they get desperate, that offer is going to start moving lower, right? And remember, we suckered all these people into going long here. They're not happy. They're starting to puke it out. That's what's causing inventory to move down. Now, do you guys understand why I was talking about short selling, right? Because it's the fail to look above 58. And I was saying the larger traders who would have built a little short position here, this is where you want to start paying yourself a little bit. So, say you're long 5 to 10 contracts between 55 and 57, right? Maybe buy back, if you're short 10, maybe buy back 4 here. And then put some bids in these areas here, like at 51, right? And scale them, scale back into it, scale into your flat. This is where we had the bid. What did I do? This area right here, we had a bid there from 11:30 my time all the way through the early morning hours here. We had that. You can see it's pretty interesting. It bid there at 10:30, it bid there again at 11:30, and it bid there again. So there are some size orders here. Otherwise, they would have sold it back down to 48, right? Yeah, just under 51, Mike. You see? The candle charts can tell you so much. We just have to zone in a little bit. Right? So 52 is working. We got a nice little bounce off 52. So I'm trying to see where that pre-opening bid is. Because even though I'm short biased, right? Yeah. The first top line here, yeah, I would definitely be looking for a seller there. Thank you. I am short biased, but I don't know if that bid's going to hold again, or do we look below it and come back up? This is what I'm thinking right now. I'm not thinking where's the trade. I'm thinking where's the bid. Once I find the bid, the trade becomes more apparent. Remember, a gap fill is going to be 45 and a quarter. We have these lower stops here. S, V, X is just coming into them here. And that's that just under 51 area. Exactly. If the offer fails to move below that green line, it means the sellers are not willing because they don't have to. The only reason, Raj, for you to sell something at a lower price is because you have to, right? Same with this. It's the same thing. If you don't have to sell it under 51, lift the offer. Might be a little choppy off the open. Let's see. I've never looked at that stuff. I've never looked at any kind of commodities. I've done levels for gold. Man, the gold, it was like a Indiana Jones this weekend. If you read Twitter about gold. Where's the gold? Is there any gold in Fort Knox? Somebody stole it all. Da 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 da. It's like, it's like that Die Hard movie, the last Die Hard, where they took all the gold out of the vault. There's a seller. There, they showed themselves, right? They just took that bid. I saw an article. It was all that. That was all on Twitter. Like I've got a movie script written in my head already around it. Yeah, no kidding. Eh? You just get like, oh my god, I've wasted 10 minutes reading all this stuff. They just suck you in. You gotta love a good writer. All right, back down to 48. We might close that gap. This could be just a gap and trap, right? Which all my equity traders know happens all the time. They gap it, they sucker all these people into buying it, and then boom, they just sell it right back down to cost basis. So look for bids at 45 and change, because that's where the shorts will come in and try and bid to cover. It's going to happen off the open, so it might be a little violent. If it's jumping around too much, don't worry. Just pace yourself. It's a long week. See how it stopped to the tick. I'm sure there. So if we opened there, we don't open on a gap. I'm using Friday's high. Yesterday's trading is meaningless. I totally snoozed on that short. That was like a lookout block in football. Look out! I saw it happening right before me and I didn't execute. As they say in Remo Williams, I execute like pregnant yak. Okay. On the 15-minute chart, right? I'm using these levels that. Where's Doc? He hasn't been around all day. Must have him in surgery or something. I use this 15-minute chart that I haven't changed the levels on in like 2 weeks. I think there's some position here that we're coming into between 40 and 45. Let's see. So they just wiped out all the longs. They just wiped them all out. Savages. Looking at that previous day high, I think there's going to be a seller there. If you are short, your warning level is 45 and a quarter. Okay. I'm short two at 43.88, covering one at 42, covering the next one. Let's see, 41 and a quarter trades. Yes, thank you. Okay. No, that was 41 and a half, not a quarter that I paid for that on the cover. We found a bid. Let's see if it holds. Little flush on the open, right? Now let's find where the next bid is, right? That opening market bid. Who really wants to do business, right? Watching 39 and a half. And there it is. If that breaks, it's going to try and take out the overnight low. I would let it. I would not be planning any longs just yet. I'd love to see how it copes with the overnight low. Remember, there hasn't been any size sellers around for a while. Point of control moves down, good absorption, right? There's a video, Raj, on it. Just scroll back. There's a video on how how that whole process works, right? It shows how the shorts come in cover, then wholesale builds a position. You can see it by the point of control moving down. Then we start to buy because it's a look below and fail of 40, right? Now, if you are long from above 40 on the look below and fail, realize that there's going to be some sellers on the way up. When you get to the top of these candles, the sellers will initiate, right? That's just inventory. If I sold there, why wouldn't I again? See? So if you're long, say 40, 40 half, 41, put some offers out, right? Inventory is above you. This is a counter inventory trade. So if you're taking a long and inventory's above you, you're not Babe Ruth. Hit some base hits, 2 points here, 2 points there. It adds up, right? 41 to 43, in, out, boom, bang. Point and 3/4. Larger traders. If it holds 41, you're okay. That's your warning level, right? If it holds 41, you're all right. If it starts breaking 41 and you're long a little bit of size between 40 and 42, I mean, you might want to lighten the load a little bit, right? You can always buy it back if it clears back over 42. That's cost of doing business. It's slow enough that you can build a little position. It's not a fast tape. Let's see what happens when that next 30 seconds goes by. And if we start offering 42 1/4 in printing, that's better. See, this is why not everybody sells at the same time. That's why quick in and out trades after an inventory correction lower, that look below and fail, you have to chew through all that paper on the way up. All these trapped longs, right? They're in your face. See how it's holding that green line? So that means other people are doing what I'm talking about, building a little position here. Now, smart traders, when a market breaks a certain level, they will start getting rid of inventory before they have to put it on deep discount. That's why you cut your losses early. Does that make sense? Like if you buy something at $5 and it drops under 5, wouldn't you rather sell it at 450 than at 3? Something to think about. See how it's slow right here? Look how tight the candles are. The candles off the open on the 1 minute, look, they just big, big, big candles down, and all of a sudden it's choppy. Hmm. I'm still not convinced about that overnight low. I don't know about you. I'm always skeptical, right? I trade long a lot, but I'm always a skeptical long because I've always been the seller, right? Which is always something that biases me. So that way I have to zone into the candles. Otherwise, I'll always be thinking that the market is something that I want to short. But this market is not built that way. It's not built like a penny stock. There we go. I want to see that low get tested. I want to see that low take a good punch so I can see whether or not it's going to hold or if we do a look below and fail, a look below and go. Now, when we get up to that 41, that support level, is that going to turn into resistance? When a market opens, I like to observe it, maybe scalp it a little bit. I'm not seeing those sellers really have to push lower, right? Try a little long here. 40 and 3/4 long on two. Offered at 42, out one at 42. The last one, I'm going to put a 42 offer in and I'm flat. All I wanted to do was short this. But when I saw it take back that green line and start to offer, I had to take the long. I just had to do it. Everything told me to go short. All my senses were saying, go short, go short. It's going to crash. The candles told me, psst, psst, don't do it. And that is the hardest trade I've ever had to take in my life. Trading against my bias. Dear God, it's difficult. And the way it helps me is to talk to you guys about it while I'm doing it. Because saying it out loud makes it real. If you're thinking it in your head, that's why you have those two things of thought going in your head, right? So I'm like, I'm really short biased. I really want to short it, but I can't. I see that it only offered under 40 for maybe about 40 seconds. So I've got to go long if it reclaims 40 and 3/4, which is what I did. And I just mechanically forced myself to take the trade. It's the only way I've been able to do it. Otherwise, you get it in your head that you're right, even though the chart's telling you you're wrong, and you keep fighting it and fighting it and fighting it and fighting it and losing money. And that's why I like these micro balance levels. And you just draw a line. If the market can't offer below that line, you've got no business being short. It's real simple, right? Here, we offered pushed lower, and I really wanted to short it when it came back up. When it came back up and it reclaimed 40, uh-oh. And then the offer lifted above 40 and a half, no reason to go short. It makes sense when you say it afterwards. Exactly, Ralphie. Here we go again. Now, if you want to take a poke at it again, realize that all the shorts cover at the overnight low. That's why it's like trying to stuff a suitcase. The lid keeps popping up. See how it offers back up? And once again, I'm really short biased because I really want that overnight low to get a good punch in the face. But so far, can't hit it yet. Right? I wish I could predict what a market would do. you know, it'd be on my yacht somewhere very warm, eating it, whatever it is people eat on yachts, you know. I can't predict. Heck, even when you do a deal, you can't predict what kind of buying's going to come in. See, then again, look below and fail. But you know that there are sellers here at 42, right? So if you are taking that trade, know to put a 42 offer out. They might even front run it, which they just did. The smaller the candles get, the less you trade. Very simple, very simple, right? This is just common sense. And right now, even building a position short or long right now, I don't see it clearly. I'm starting to detach from it a little bit. And that sometimes happens to a trader. Your attention span will start to waver. You have to recognize it when it does. I haven't concentrated on anything. I didn't do chart replay this weekend or anything. So the couple of trades I've taken with you guys are really the only trades I've taken. And so I have no desire to put a lot of money at risk until I kind of get a sense of what's going on this week. Right? So if you're trading in this chop, you will get stopped out, right? Now the market's starting to offer a little lower, and they're trying to get as much cheap inventory without breaking that overnight low. There we go. There we take that overnight low, break the stops. Is it a look below and fail? What's the anybody got the breath? Hey, yes, what's going on? Pure profile trade. Scalp long one micro at 37 and a quarter on a look below and fail. And I think 38 and a half. I'll put an order out and see if I can get taken. Otherwise, if it gets down to 36 and a half, I'll be scalp out. 38 and a quarter. Should I just hit the bid? I'm out at 38 and a half. Little scalp of the overnight low. Thanks, Peter. There's not much. There's not much order flow, not much oomph. 0-1, it's like putting really bad gas in the old vet. It's got maybe a little bit of water in it. It's not the high octane stuff. So it's not firing really nice just yet. And that happens in markets. Because who the hell wants to buy 61.38 for a swing trade? It'll come. There will be better entries. Market itself is like a human being. It's a little lazy after a long weekend, right? That's why they invented the Wall Street Journal. You let the market open, you read the paper, you catch up on some gossip, right? If you were like those guys in Mad Men, you have a lucky strike. Start your day. No need to go rushing into it. Okay, so breaking that overnight low. Now we get into the good stuff. Let's look at the structure. Okay, so there's Friday's close, and we'll finally tag it. Next set of lower stops is going to be that O low underneath 61.31. So 29 and a quarter. Get rid of this. There's the close. Okay. So this is exactly what we were looking for, like the book said. Lots of trap longs, puking out inventory. Wholesale owns it here over the last 2 days from the 13th and the 14th. Okay. There's the point of control from the 13th, the point of control from the 14th. So this is our 2 day position right here. See? Now, if we have further selling, we're going to break 61.29. And then we'll just use these levels as the stops. Here's where it gets interesting. When we get underneath 61.25, we still have trap shorts down here, remember? From the single prints of the 13th. And then we have another set down here. So we still have not filled in those trap shorts. Okay? And we just caught a bid off the close. Let's see if there's any continuation to that. That's why shorting this market is a real pain in the butt. In and out trades, hit and run shorts, I say. Hit and run shorts, right? As Diana would say, hit it, quit it. Take take your 4 points. 4 points on 3 to 4 contracts is not bad. Do the math. You can live on 4 points. I'll take a 4 point trade any day. Right? On one contract, that's $200. On 4 contracts, that's an $800 trade. Do that once a day, and you're making 15, 16 grand a month without killing yourself. Learning it is not easy. Let the longs puke out, right? We'll use the balance levels, the extension of the 8 times zone, right? So 8 times discount is here, 61.24. See if we can get underneath the close and tag 31. The previous day low is also down here. Imagine there'll be some responsive buying there. But we don't know because it's a new week, right? So we don't know how the business of this week is going to turn out. Has this guy said anything today? Has there been any tweetage? I haven't really been up on things. we came into the cost basis, right, Nellen? So what creates support? It's when the selling starts to slow down. It's not buying, right? So where would the selling start to slow down? Right where they acquired the goods. Yep. So we're finding support, cost basis. Exactly. Now you're cooking with gas. Another look below and fail of the overnight low. So once we come back and stay over that overnight low, you are going to encounter some resistance here at 40. So if you are long, just know that. So ZR1, your entry could be, it could be simmering, waiting. Let's see. There we go. Signs of life, right? Poke above 40. Sellers in the same place. Once you get good at the look below and fail, and you have larger accounts and you can manage positions, then you can build a little long when you see stuff like that when it comes up over 37 and sell 37, go long 37 to 34, to 40, sorry, right? That kind of thing. So what I'm waiting for now, because I still got a bit of Monday morning brain, even though it's Tuesday, I want to see it reclaim this level before going long. I don't know if I'm sharp enough to short it right now. That's how I think when I'm trading. Am I really quick enough to grab those quick shorts, like shorting 39 and a half against 40, 40 and a half? There's no offer under 38 yet. You guys are really quiet. You must be trading away. Right? I'm seeing hit and run shorts. So far, right? And this is what I'd write in my trading journal. What's the business like today? Sure, there was a correction to overnight inventory, right? Which was perfectly tradable. Then a look below and fail of the overnight low. What else? Couldn't break cost basis, right? So now you've got some sort of a lay of the land. So if you're a short seller, now it should be like click, click, clicking in. When you see things like, Okay, inventory corrected. Check. Look below and fail of the overnight low. What does that tell you? That tells you it's an inventory correction. It tells you the leak in the boat is small, right? And the fact that we couldn't break the cost basis, well, that means it's just correcting inventory. Otherwise, we'd already have filled the 6126 single prints. So then you write the bid from the shorts of last week is still present. That's it, right? And that's how I write down stuff so I get pertinent information on what to do. So if you want to take it a step further, now based on those 4 or 5 things that I just said, you go, oh, look below and fail is still favored. Shorts should be hit and run shorts, right? Now you have a plan of attack, right? You've assessed the business conditions and you're going to trade accordingly. Does that make sense? Well, yeah, because once you find the bid, Christian, then we can work off of it, right? So we found bids here at 34. And this information is always getting updated. So now if we come back to 34, don't just take it for sure. Watch to see if it holds. Because if it doesn't hold, we could get a further liquidation, right? And then you just kind of want to step aside and go, okay, now where are they going to liquidate to, right? Because we have all night, yesterday's little session, and if we stay underneath 35, 34, we're going to get a lot of that Friday inventory pre-weekend that's going to start to puke out a little bit. But once again, down to 35, boing, there's the bid. That's why we test trade. Test trading is like when you go to a swimming pool, you kind of put your toe in it instead of just jumping in. Well, now people jump in with all this cold plunge nonsense. But in the old days, you'd go dip your toe in the pool and see if the water is nice or not, right? Same thing in a market. Here's B period. Just common sense. Or throw your brother in. See, on the trade desk, you just log into somebody else's account and take some trades. Oh, they lost 800 bucks. Okay, I know not to trade. Uh, there was one brokerage firm. There was a trader. We used to call him the doctor. Hey, poor low. Okay, there's some competitive buying there right at the close. And they used to have these Vancouver terminals there. Look at that. Right, just ran the stops. Looking for 31 quarter now. Obviously, there's a little bit of news, right? Or a little bit of order flow that flashed, a little bit of size came in. Don't stand in the way of that. Once again, let the large traders take care of that. Watch for the reaction at 31 and a quarter. And then once again, previous day low is what has my immediate interest now. If you're short, you can stay short, right? If we can't take out 28 and a half, govern yourselves accordingly. There we go. You can still stay short. Where you're going to get some bids is that green box, right? The previous day low, 61.26, right? Off of this level here. Yeah, this was back in the day. We each had terminals that we were logged into, and he would just like push a rookie out of the way, put in trades on their terminal. uh, oh, he was the best. Just a freak. He was kind of like a cross between a trader and Wolfman Jack. We had some characters. Looking for that 31.25 area to see if it's a sell. Let's see if there's sellers here at 33. Coming up on 33 again. Let's see if we cleaned out the seller at 33. If we have, next seller will be at the close. Once again, I'm insanely short biased here. Scalp long, I mean short, at 32 and a half. And I'll put in a bid at 31 and see if I can get a fill. If I don't get a fill, I'll just scratch that trade. I'll go 31.25. Let's see. And it's just one micro. I'm just testing to see if that seller, and I'm scratching it. I out. Not going to waste a lot of money on it. No, I'm still in it. My out is 33 half. Hey, I got filled. Huh. That was just with one micro. I always have to get my execution sort of warmed up. What else is going on? No, no, I was thinking, I was just, I've been short biased since the open, but just scalping it and not much at all. Look above and fail of Friday's high. Oh, yeah. Now remember, you got to give this thing another 23 minutes to cook. Because what happens in 23 minutes when C period opens? If C period has single prints to the downside, right? So if C period opens underneath 33.5, then we know we got supply. There'll be single prints. But, ladies and gentlemen of the jury, I submit to you, what if C period opens and we open at 35 and do this? Could happen. I'm just saying, right? Be open-minded. Oh yeah, where is VWAP? Ah, 42. Quite a ways underneath it. 42 and 3/4, right? But this is where market profile will give us a really good heads up. I'd scalp this, that's fine, not a problem, but I'm not building a position for another 20 minutes because I want to see whether or not we get two distributions. Do we get single prints? Are the longs really that trapped above 36, right? Find out on 23 minutes on as the tape turns. A little bit of mystery. No, no, they're always buying. The good thing is, all we have to know is that they exist. All we have to know is that they exist and they're moving product. You make that the focal point of your look below and fail, look above and fail. Do they have to put the product on sale or do they don't? Very simple. I would love to see what happens if we get underneath Friday's low. I want to see some liquidation. I want to see where the big bids are. Right now, it's just pussyfooting around. Right. I would say that there's a seller now starting to get frisky because they were there. Now they're there. Now they're there. Right. So, because there was a standard deviation there too, which would always, that brings in sellers. There's nothing like a standard deviation to attract sellers. So if you're shorting and you see the market do this, you get this one big red candle. Is that just a momentary lack of supply? Or is that something that you want to short into? Well, here's the thing. If you do short into it, just use the structure for your stops, right? Every market has a structure, whether it's candle or TPO. If you're a big spender, your stop's going to be 36, right? If you're not a big spender, I'd go 35 on that stop if you were short under 34. See what I'm saying? And if you see that offer, if you see the offer starting to creep up over 34, then you know that you're in trouble. Hey, Andy. So if you're short here, this is sort of your warning. You could use this as your out, the top of that standard deviation in those candles. And if you're a big spender, 36 is your out. I wouldn't spend a lot more money on it. This is how you can tell. See now, if you're in a short trade, and say you're short 33, 32, well, it's not going. Your offer is starting to lift. So if the offer is starting to lift, why the hell would you be short? So we told you that if it started to creep 34 and you're short 33, take the hit there. Take the hit instead of getting sucked into this. I'm already writing one book that I can't finish. It would help to know if I knew how to write instead of just babbling random words across the screen. Right? I'd call it not another trading book. That would be the title. uh, Not another trading book. Uh, See, now we're way off that A low. We're above the close again. Let's see if that lasts. Now we're 15 minutes into this half hour bar. Give it some time. I'd like to see that developing point of control move down, see some good accumulation. But we've all seen this happen, right? Overnight inventory long, liquidation into wholesale hands, and then taken back to sell into the retail flow. We've all seen this happen before. Thing is, we didn't take out Friday's low. Still early. We still have another 14, 15 minutes. Let's see. I shouldn't start trying to bias us, right? Yeah. So what he says valued is developing is for me distribution or accumulation of the position, right? Same thing. They call it the value area. I call it the cost basis because I'm more of a merchant, right? I'm a pure inventory guy. How many oranges do we got? Let's move them out the door. And right now, here in my head, I was thinking, you know what? If it holds 35, it might be a nice long up to 40. That didn't happen, so I missed something. So I should not be trading until I figure out this order flow. So when I make a bad call, I didn't take the trade, but I made a bad call in my head. So eh, maybe I'm not really as tuned into the market as I should be. And that way I'll limit my trading. I don't mind being wrong. I don't mind at all. Doesn't bother me at all. I'll be wrong all day. I'd rather be wrong than lose money any day of the week. I don't mind being wrong. I just don't want to lose a lot of money. I'm wrong. I admit it. Move on. And if I'm not, as my mother would say, quick on the uptake, which was a very polite way of telling me that I was stupid. If I'm not quick on the uptake that morning, I will trade less. I will trade the micro until my brain catches up with the market. Does that make sense? And that's how you preserve capital. I still don't have a clear picture of what's going to happen. So I'll wait. I'll wait out the next 10 minutes. Not a problem. I don't mind. Right. I've been talking to you guys now for an hour and 20 minutes. So my focus and my attention is starting to drop. When my focus and my attention starts to drop, I put the Dom away. First thing I do, it's just habit. It's instinct to put away the Dom so you don't get tempted into doing something stupid. That's just the way I am. It's just how I do business. It's all it is. Right? I'm very, very disciplined. And it's probably the only thing in my life that I'm disciplined at. And it's been painful to develop that discipline. It did not happen naturally. It it was painful. Hey, NFT Bandit, how you doing? Yeah, it was good to be on with Doc, with Coach. Gotta love the Coach. I like being on those shows with the older guys because it reminds me of the guys who trained me. Not many of them left. I do. I use the Dom. Do I watch the Dom? Dear God, no. And no trader is ever going to show you their intentions on the Dom. It's all window dressing. You'd have to be on a Tony Montana Coke binge to show the market what your true intentions are if you're trading size. They will pick your bones clean. Right? Hey, I'm out here. I'm trying to buy 1 million shares. Oh my God. Do I need to sell 1 million shares? Anybody want to buy them? How to cap a market down. That's why, I mean, anybody who uses those things in a retail capacity, you can tell they've never traded size. Are you using the 9? I wish I would have kept with that to see what the results were. I had the 9 EMA on my charts like 2 years ago, and then I didn't keep track of how well it was working, and so I took it off. But I hear good things. Like Adrian uses it, as a teen uses it. There's a couple of other people. We stole that from Steve in the equities room, the 9 EMA. That's right. Now you guys have all 821 or all these. I don't know how you figure out which ones to use. That's the only problem with those. I find them very cool, but I don't know which. There's too many, right? I started with that, and then because my girlfriend, when she was trading a little bit, she'd use this one and use that one and use this one and use that one, and it was like Pringles. You just couldn't eat just one. There was like 20 EMAs on my charts, and I couldn't figure anything out. So that's why I don't even like to have VWAP. Usually, what I'll do is I'll just draw, like, okay, VWAP's here, purple line, and then I just get rid of it. Right? And I'll check in on it every couple of minutes or every. So I know VWAP is just right around here. Right? But it's slowing down. Just picking up contracts. Yeah, it happens, 0-1. Yeah, you got stopped out because inventory was above us, and we were correcting inventory lower. Right? So when you rewind this, you'll see I was talking about that inventory correction lower. It happens. Don't worry, you haven't traded for 3 or 4 days. You're going to be a little rusty off the get-go. It's all right. It's like a Monday, man. Just make sure you didn't lose a lot. Take a break now. Reassess. Happens all the time. The worst is on Friday if you're trading great, then you get Tuesday after a long weekend and it just does not go well. That's the worst, right? It's always the worst because you're like, what the hell? I was trading like a god on Friday. You're still learning. Don't worry about it. You'll be all right. Just chill out. Got lots of week left. You guys in the coaching class, I haven't heard from anyone. Ray's doing his thing tomorrow. And so what I'll do is I'll start doing price action labs on Thursday. Now, if you guys need help, reach out, okay? DM me. I'm open for one-on-ones and stuff like that, but I can't chase you guys around. You gotta I'm around. Okay? I think we're gonna have some single prints to the downside. I would like to now, since we're in this area, why not go down and test those bids underneath Friday's low? I don't think it would hurt anything. If you're getting chopped up, just take it easy. Ease into the week, my friends. Ease into the week. Scalp around using the micro. If it's not working, take a couple of hours off and come back. Sometimes a fresh perspective is needed. There's that new balance zone I was looking at. 60.22 to 61.16. And then I doubled it. And so 61.63 quarter, we just can't get past that and put in. This market really doesn't have a reason to hit all-time highs yet. So I think we're still going to have some back and forth. Right? It's good to see inventory correct. And when you look at it from a bird's eye view, you could see anyone who's long over 61.30 on a swing basis is not happy right now. So we're going to get those little inventory corrections lower. I did. Right now, when you see it from a bird's eye view, you can see that inventory kind of hanging over the top, right? This is what we call, in the old days, we used to call this overhang, right? Because these people are long and their supply is overhanging where the current price is. You see? So close your eyes and imagine, oh my God, if I was long in this box, I'd be like, I don't know. Do I really want to see if that 28, 29, 26 area, is that really going to hold? Are these single prints going to hold up all of that? And then these single prints, I don't know. Till then, just trade your balance. It's a little harder to trade today because we're look below and fail traders and inventories above us. And this is what I've been prattling on about. I'll get the list out. I'll try and get it out today for comments. See, here we have those single prints to the downside. That's a little chunk of supply. So the opposing forces are, we have supply here and we have demand here. So we might just bop around between 26 and 31. Let's see. Or maybe later on, ZR1. You got to let them beat all the dirt out of the carpet. Then the look below and fail trade's much better, right? We're still vacuuming up contracts. Thanks, everyone. If you need help, reach out. I'll be back in about 45 minutes. Bye for now.